itself, UltraTech came out with an announcement that they're going to be heading and adding big capacity expansion. Remember, the street was bracing for an announcement for the last couple of quarters that it's likely to come sometime in the middle of this fiscal year. However, this has come sooner than expected. So, run you through the brief details. Well, they're looking to spend nearly around 12,900 crores or thereabouts to add capacity of around 22.5 million tons. So that would mean an EV per ton of around $76 on a per ton basis, and they'll fund it via a mix of debt as well as internal accruals. The capacity currently is around 120 million tons. They've already announced capacity expansion, and add this as well. So by 2025, the capacity moves to nearly around 159 million tons. But what is the impact? For UltraTech Cement, well, they are taking the fight, to any potential, someone who's trying to take their #1 position. So they are going ahead and they've announced this capacity expansion. So for UltraTech Cement, you read it positively, at least in the near term. Morgan Stanley, well, they believe that the cement sector itself is bracing for a sharp upturn in terms of demand, and the leader, UltraTech Cement, is well placed. So they have an overweight rating with a target price of 8,800 rupees. For the industry, aggressive capacity expansion could be a bit of an issue because it could lead to oversupply, in turn putting pressure on prices. Citi, they back that view, though they have a buy rating on UltraTech Cement. They say pricing trends could remain muted or could remain range bound as well going ahead. Now, what is the third factor that could play out? Players who have clean balance sheets like a Shree Cement and Dalmia Cement, well, they have been talking about adding capacity, so they could very well go ahead and become a little bit more aggressive, which will be a bit of a problem for smaller players in the industry. So the small and the mid-sized players in the near term, they could face the heat. And Jefferies highlights this point. They say that there's more headwinds lined up for some of these small and mid-sized players, though they're saying going ahead, we could expect some consolidation to take place in the sector as well. Back to you guys.
Right, Nigel, thanks very much for that. So that's a comprehensive explanation of what this could mean. Let's get an analyst perspective as well. Rajesh Ravi is with the institutional research team. He's analyst that tracks the cement space at HDFC Securities. Rajesh, great to have you with us here. Thank you very much for your time. What do you make of what UltraTech has announced? What does this do to ROC, to UltraTech's return ratios like ROC, etc., over the next year, 2 years? And do you reckon this is, as Nigel highlighted, perhaps be the start of some sort of a capex war? Your sense, go on.
Hi, good morning. And as Nigel laid out comprehensively, first thing, is this a negative? Is this a surprise? Is capex announcement? Not at all. UltraTech has always been mentioning that they will keep on adding capacities to maintain the #1 position, and also will continue to gain market share, at least not lose any. So these expansions were on the anvil. The details are yet to be out, in terms of which market they are adding capacities. Obviously, they would not prefer South. Outside of South, they will be adding these capacities. Again, balance sheet, what does it, would it have any impact on the balance sheet? No, the balance sheet remains strong. In our understanding, the company would be churning out at least 10,000 crore of annual OCF, which will be more than sufficient to fund these expansions, as the new expansion as well as the ongoing expansions. So, in terms of balance sheet and in terms of growth, UltraTech is well placed. They have strong distribution both in trade and non-trade, and these capacities will continue to drive their volume growth. Now, coming to the, how does this change the dynamics? So last year we had published a detailed note in terms of the industry trends. And what we understand, this current phase of consolidation which the industry is going through has to be driven by the top 5 players adding capacities. UltraTech is doing it. Shree Cement is already on that path. Shree and Dalmia. ACC and Ambuja have also recently announced brownfield expansions and intentions to do more capex. And so this is where, if you look at the top 5 players, the incremental capacity additions over the next 5 years will be led by these 5 players. So the preceding 5 years was driven by a lot of M&A activities. The next 5 years, the consolidation is by the top 5 players. So the industry is getting consolidated, and this will further boost the industry's pricing power. Yes, headwinds for some of the smaller players where there is a large leverage, for them things are going to be slightly difficult, but overall, from a 3 to 5 year perspective, this is to be taken positively, that the industry is getting more and more consolidated.
Okay. Yeah. These smaller companies, right? I mean, that seems to be the big concern, because not only is there a large expansion plan by UltraTech, but there's also cost inflation that these smaller companies are dealing with. I was just going through the list. I mean, names like JK Lakshmi Cement, Shree Cement, Heidelberg, JK Cement, all of them, the stocks are down anywhere between 15 to 30% this year already. You think the worst of the pricing pressure, the competitive pressure is priced in to the stocks, or could there be more to go?
Hi, good morning. So what is happening is, you see from September last year, when the cost pressure started hitting the PNL, almost all stocks are down between 30 to 40%, or to say to some are down 45%. So large, major chunk of this pressure, this is happening because of the cost pressure, because of the fuel price. Last year, similar time, the fuel prices were ranging at rupees 1 per 1,000 kilocal. Now that is at 3 rupees per, almost 200% jump. So this cost pressure is not getting totally passed through. So if you see the EBITDA pattern for the industry in H2, it fell by almost 300 rupees versus H1. And even if you look the next 6 months, so H1 of FY23, we are stating at 100 to 150 rupees margin contraction versus H2. So yes, in terms of the headwinds are still not over. So, that is where these are weighing on the stock prices. From a near-term perspective, everyone is getting hit. And smaller players, mid-sized players who have leverage on books and where the EBITDA margin base is already low, say 800 or 700, for them the, FY23 is going to be more difficult. So net-net, what would happen is that, for this would open up some inorganic M&A opportunities for sure. Some of these smaller players should look to get a good value and sell off rather than get butchered over next 5 years.
Got it. So Rajesh, good morning. So some names like Dalmia Bharat, Shree Cement, and they have seen the biggest correction, right? Dalmia I think is down well over 40. I think Shree has lost about 30%. Is there some value in these stocks, or they need to correct more?
So you're right, Dalmia, Shree Cement, UltraTech, all of them have corrected 30 to 40%. As I said, only ACC and Ambuja have in the last 1 month gone up because of the corporate action which has happened. Otherwise, most of the stocks are down on an average 30 to 35%. So is there value? Yes. If I look from a 2 to 3 year perspective, all these bigger companies, primarily UltraTech and Dalmia, which we believe are in a sweet spot, if at current valuations, while this FY23 is going to be tough year because we cannot take a call on where the coal prices would be 3 months, 6 months down the line. But if I look at for cement, the biggest profit determinant is your pricing power. And given that the industry is consolidating, there's a better predictability in terms of cost pass-through capabilities and sustainability of margins north of 1,000 rupee EBITDA pattern. And that is what is getting corrected, in terms of this consolidation. So from a 2 to 3 year perspective, we remain very constructive on the sector. And among the cement majors, we like UltraTech and Dalmia.
So, okay. So what's your target price, both on UltraTech as well as on Dalmia? I didn't get that.
So UltraTech, we have a target price of 7960.
And on Dalmia? Oops.
And in case of Dalmia, we have a target price of 2030 rupees.
All right.
Okay, Rajesh, thanks a lot for those suggestions and your view on the cement sector. The pre-open has settled, by the way, 133 points higher on the Nifty at 16,761, 315 points higher on the Bank Nifty at 35,929. So looks like a good start, and of course then after that we'll take it from there. Mitesh, pre-open here, do you trade either the Nifty or the Bank Nifty, and what's your 9-10 call?
Anuj, as I said, I think, after the gap up, wait for that mild pullback to happen before you take fresh long positions. But on stock side, keep trading with long biases, and I think the call today morning could be L&T Infotech. That's a buy to stop at 42.80 for a first target of 44.50.
All right.
Any thoughts, Mitesh, on, how's Deepak Nitrite set up, the chart?
Yeah, actually, I like the stock. I think there's some negative news flow, but I think if the stock can recover from that and get past yesterday's high, I think there should be continuation on the upside, and I think the stock should head towards 2150 base.
Okay, just a minute for the market to open. Looks like it's going to be a good opening. This week, actually, you've had some good performers. M&M is the top gainer this week, up 10.5%. Reliance has had a very strong run. These two stocks, Mitesh, M&M and Reliance, do you see further up moves here?
Yes, M&M very clearly is making new highs, and I think there's a lot of space on the upside. The momentum indicator suggests good possibility of continuation. So I think every decline now to levels of 1020, 1010 will be a buying opportunity. And I think eventually we are looking at 1140, 50 as the target. Whereas also you have buy calls and have maintained positive bias. I think it is heading towards levels of 2880 onwards.
Okay, Mitesh, thanks a lot for those calls. The countdown to market opening is on now. Now you know, we had a 100-point rally yesterday, and looks like we'll add another 130 today. So 16,761 is what we have